In just 72 hours, nearly $47 million in cartel cash moved through TD Bank branches, undetected. By the time regulators pieced it together, the total had ballooned to over $3 billion. And the most shocking part? This didn't happen in some offshore banking haven. It happened inside one of North America's largest banks, hiding in plain sight.
If you combine what the drug trafficking business earns, I'm sorry, Mr. Bezos, but you're not even on the radar.
When most people think of drug cartels, they picture border tunnels, masked gunmen, or suitcases stuffed with cocaine. What they rarely picture is the clean, glassy facade of a downtown bank branch. But drug empires aren't built on violence alone. They're built on laundry machines for money. And no machine is bigger, faster, or more efficient than a bank. That's where TD Bank enters the story.
U.S. authorities have slapped TD Bank with a historic $3 billion fine after the bank pleaded guilty to multiple charges, including conspiracy to commit money laundering.
Well, it was a bad week for TD Bank. Canada's second largest bank has agreed to pay a record $3 billion in fines to American regulators for allowing drug cartels to use the bank's services for money laundering.
TD Bank created an environment that allowed financial crime to flourish. By making its services convenient for criminals, it became one.
With over $1.9 trillion in assets, TD is Canada's second largest bank and a household name across North America. Trusted, polished, stable. The kind of institution that markets itself with images of green logos, smiling tellers, and community trust. But behind the scenes, between 2016 and 2021, federal investigators say the bank became something very different. A laundromat for cartel money. Here's how it worked. Cartel couriers would show up at TD branches in New Jersey and Florida, carrying bags of cash, sometimes literally stuffed with tens of thousands in small bills. Instead of raising alarms, TD employees allegedly looked the other way. Sometimes the deposits were broken into smaller chunks to avoid suspicion, a tactic known as structuring. Sometimes the cash was simply waved through, despite glaring red flags. By the time anyone asked questions, the cartels had already moved billions into the U.S. financial system, clean as polished glass. But here's the catch. Ordinary customers making everyday transfers were getting flagged, frozen, and interrogated, while cartels were depositing duffel bags of drug money without a hitch. To understand the scandal, you need to understand how money laundering usually works. Cartels don't just need to move drugs, they need to move money. Every pound of cocaine sold in Miami or New York generates mountains of cash, dirty cash. It can't just be wired to Mexico. It can't just be deposited at once. It needs to be cleaned. And the first stage of laundering is called placement, physically getting dirty money into the financial system. That's where TD allegedly failed, catastrophically. Take one example uncovered by investigators. Over the course of just a few months, couriers deposited tens of millions in cash at TD Bank in Florida. One branch saw $47 million in deposits in 72 hours, more than the legitimate economy of the entire town could generate. Did employees ask where the money came from? Did compliance officers flag it? According to federal prosecutors, no. In fact, some employees allegedly helped the process along, coaching depositors on how to avoid detection. Meanwhile, the money was being funneled through shell accounts, transferred to overseas banks, and reinvested into everything from real estate to luxury goods. And if you're wondering how regulators missed it, they didn't. They warned TD repeatedly. As far back as 2018, the Office of the Comptroller of the Currency raised alarms about TD's weak anti-money laundering controls. By 2020, the warnings grew sharper, but the violations kept piling up. And this wasn't even the first time. Back in the early 2000s, Wachovia Bank was caught laundering billions for cartels, and TD knew that history. Yet here they were, a decade later, repeating the same mistakes. Now, here's where the hypocrisy stings. While cartels moved billions without resistance, ordinary people, immigrants wiring money home, small business owners making large deposits, often found their accounts frozen under suspicion of money laundering. Imagine being a restaurant owner in Miami, depositing a week's cash earnings only to get grilled by the bank, while a cartel courier drops off $400,000 in shrink-wrapped stacks with barely a glance. That double standard is the core of the outrage. It wasn't just incompetence, it was negligence that favored criminals over citizens. So, what happens when one of North America's biggest banks gets caught laundering drug money? In 2023, U.S. federal prosecutors announced that TD Bank faced potential fines in the billions. Lawsuits were filed, investigations deepened. By mid-2024, the bank confirmed it had set aside over $450 million to deal with potential penalties. Analysts warned the final bill could exceed $2 billion. The stock price wobbled. Executives issued carefully worded apologies, promising reforms, new compliance systems, and accountability. But here's the uncomfortable truth. Historically, banks rarely face consequences proportionate to the crime. Wachovia, caught laundering $380 billion, paid fines but no executives went to jail. HSBC, nailed for laundering money for cartels and terrorists, paid a record $1.9 billion fine. But again, no jail time. So far, TD's scandal looks like it will follow the same script. Fines, settlements, promises, but no real accountability. And what about the billions already laundered? That money is gone, folded into legitimate investments, propping up cartels that continue to wreak havoc across the Americas. But the biggest question is this: if a bank as large, as visible, and as regulated as TD can become a cartel's laundromat, how many other banks are doing the same thing right now, undetected?
My name is Robert Mazer. I spent 2 years undercover, laundering tens of millions of dollars for Pablo Escobar's cartel. I happened to be driving past a branch in Tampa of the Bank of Credit and Commerce International, the 7th largest privately held bank in the world. It was a big gold sign. I would have never walked in there if it wasn't for that. And they said, well, we'll give you a meeting if you can give us a resume. I had a fully verifiable resume, and I had bank accounts with millions of dollars in it, all of which the bank in particular wanted to see before they opened up to me and explained to me how they laundered money for many people in organized crime.
This isn't just a TD story. It's a story about the cracks in the global financial system. For every compliance officer, there are 10 bankers chasing quarterly profits. For every flagged transaction, there's a loophole. And for every cartel courier, there's a financial institution willing, or negligent enough, to move the money. That's why regulators describe money laundering as a low-risk, high-reward crime for banks. The fines, while large, pale compared to the profits. And in the end, it's not just about numbers, it's about the consequences. Laundered money funds violence in Mexico, overdoses in the US, corruption in Central America. It fuels a cycle that destabilizes entire regions, while the world's banks cash in. So next time you walk past a gleaming bank branch, ask yourself, is this a vault of trust and stability, or just another laundromat in disguise? Because if TD Bank's $3 billion scandal proves anything, it's that the line between cartel and corporation is a lot thinner than we'd like to believe. If you like these deep dives into scandals the mainstream ignores, I post 3 every week. Hit subscribe so you don't miss the next one.